All right, everyone, welcome back for the episode of This Week in Charts via Conover Trades and Wall Street for Main Street. If you've not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find Jason on Patreon. Come find me on ConoverTrades.com for swing trading alerts, analysis, and live day trading. Anyways, let's get into it this week. So markets this week, a little bit of weakness here as we get towards the end of the week. We did obviously have that big move here late last week off the election, and we covered that earlier, and saying that a lot of hedges getting closed out, as any fund would, right? You can't walk into a general election and not be hedged, especially for the likelihood of a contest or something like that, which is what a lot of people were fearful of, and that's how we got that big squeeze up. And we're finally seeing that get walked back here. You can see we kind of broke back below this little trend line, a minor trend line here on the daily, and we're now testing the 20-day as well as the previous all-time high here on the S&P. It is OPEX 2 for the the month of November, and I think a lot of this pullback here is related to that. We saw a lot of inflows along with those dealers kind of getting squeezed out on those hedges, and so big record inflows here into large cap equity funds. It's pretty much across the board here. A lot of retail piling in too. So market's definitely a little stretched there in the short run, and now kind of retesting the 20-day moving average. You've seen the VIX wake up a little bit here. Well, I guess not a little bit. 20% is a pretty good move, although it is still quite substantially off the highs, and all the way got all the way down to a 13 handle as of the low yesterday, 13.59. So markets getting a little bit of a pullback here. And we'll see what we get going into next week. Spiders here again, right into that 585 handle, as you can see here. I think I talked about this earlier this week, but I kind of talked about 590, and then maybe I said 585 would be like the low end of where we could go, and I think that's where we're going to be. I think that's where largely we're going to end up here. If we do continue down, I think 580 is very good short-term support for the spiders into early next week. And, we could look for a bounce there potentially. I don't think the market's going to do is going to make new highs anytime soon. I think we're going to be looking at, at least a week or so of backing and filling. I think I talked about this. I know I talked about this on my channel, but again, looking at the S&P, at least even yesterday and the day before, we're 150 points extended from the 20-day. And the Qs, were like 20 or 25 points extended from the 20-day. So now we're actually below that and back into kind of like more reasonable territory here. But we'll see if dip buyers come in one more time as we get closer to the end of the year. There's a lot of talk about euphoria. Obviously, crypto is one of those. A lot of meme coins, altcoins running. Dogecoin now is valued more than Ford and 95% of the S&P 500 companies. So we're definitely seeing that froth in the market. It is coming out now. That said, I don't think the bears necessarily. I mean, we've got a little bit of chart damage here for sure, but there's still a lot of work to be done. And I think as we get closer to the holidays, they're going to really have to start damaging this chart more. You're going to need to see a lot more of that, particularly on the S&P. I'd need to see us break below 580 at a minimum, and then we need to start getting below the 50-day and such. Really by kind of like late next week, because you're talking about going into Thanksgiving. If we're not doing continued chart damage by then, you're going to be going into the holiday period, and then we're going to start to get end of year flows and that type of stuff. So overall, good pullback here. I do think the Russell can do more backing and filling versus the S&P and QQQ, just based off of the size of the move that we had. And, we're basically back into that previous high there. So I think 225 is good support there. You got the gap fill as well. But right in this vicinity, 223, 225 area, we could even go and round trip to this trend line too. In fact, maybe we could even pick this and put it right there. Either way though, right in that area would be a level of interest for a bounce on the IWM. But I do think the Russell again is kind of the more crowded one. Like the Trump trade here, that's what's kind of unwinding right now. Everybody piling into dollar index, right? We'll talk about that in a minute, and all these kind of Trump trades. Tesla obviously got a huge bit. That's starting to unwind, and that's kind of what I'm looking for to happen. And small caps are no different there as we get into the next couple of weeks here. But, again, rotation can take time. It can be painful too. Dow here, down 75 basis points. Again, kind of just retraced the shelf of this move here. So we gapped up. There's the election gap. There's the previous all-time high. So pretty good pivot point here for the DIA, right around, 430, 350 or so. And you can see we're essentially right there right now. So diamond pulling back. We do have NVIDIA earnings if we look at the SMH here. So we did slice through this trend line finally. And then there's the 200 moving average just below that. I think that'll get tested early next week. NVIDIA earnings are going to be interesting. I do think, and I've been saying this, you guys know, for a long time, if this rally continues, which I think it still can have legs into the end of the year. I've been talking about the rotation of IGV. I think we're flipping now. So I think IGV is going to come out and we're going to see semis come back up. So don't be surprised if semis test that all-time highs by the end of the year. Obviously, NVIDIA earnings, if they lay an egg, that could be that could totally change. But right now, I think that's going to be the setup here. And I talked about that before, earlier this week. And now I'm seeing this idea everywhere, all over the internet. But is what it is. But nice topping tail there on IGV. And we call this an evening star, gap up, tail candle, and then reversal. So I would expect IGV to at least come down and test that 20-day. Maybe put in a lower high, and then we'll kind of go from there. There's still some support at 94. And then the big levels, right around 89 to 90. But IGV software, again, I talked about this all the way back in June. I said, buy software, sell chips. And you can see chips have done nothing since June, and software has gone, well, not parabolic. We had that dip there, but it's gone parabolic now. But that has been the trade here. Dow Transports here down 1% today. Again, I think this has some backing and failing to do too. Big move here last week. So I think we're going to be retracing a lot of this. I don't see anything terrible for it though. Interest rates, I'm very interested to see how this plays out here. You can see, so this is kind of like the overlay of the 70s here. If I was Trump, I would get in front of this right now and kind of warn about it. But, if this is going to play out, we could see that secondary wave of inflation. Tariffs are kind of double-sided. Some of these policies are double-sided. Again, immigration policy is also going to, raise labor costs. There's multiple things here that can happen. But with interest rates, sorry, let me flip back over here. Again, I've not bearish rates on the long end. I have not been for a very long time. That said, in the near term, we did hit 4.5 today on the 10-year. We also had retail sales, CPI and PPI this week, all of which came in, relatively hot. And we did make a new high on the 10-year, but we're red now. Same thing with the 30s. We're back down to flat here. Twos basically got to my target. I've been telling you guys 4.41 for like 2.5 months now. And we're almost, to me, that's a hit. It's close enough. I'm not saying it has to be perfect. We got to 4.38, right? Close enough. And I'm interested to see if they do start to pull back now. The Fed is also, or at least Powell has mentioned that he may have to slow the pace of cuts, that they're not, they're watching inflation. And that has kind of pushed the 2-year higher here, but it has not followed through since he made those comments. So I'm wondering if the inflation trade, the Trump trade, the growth trade is starting to kind of peter out to the point where the market is kind of discounting it. Again, this is not to say that it's not going to be a thing in the future. I'm speaking in the near to medium term. I think we've kind of priced that in a little bit. So we'll see. I said, maybe 4.75 on the 30-year. Well, they could still get up there, I suppose. There's a 618 right here that never got really tagged. Let me get rid of that. But there's that 4.75 area. The 10-year, did tag the 618, and that actually did it a week or two ago, but was unable to break. Dollar index also, just what a freight train move here. Not building support on the way up, though, but we did get to the 107 pivot, so right in this area again, and stalled out. Again, retail sales hot, scorching hot, right? And today, dollar index popped on the news, and it's come back down. So I think the market is starting to discount some of this stuff here. Also, dollar yen, which we can look at over here, starting to come back in a big way. Look at that reversal there. We got BOJ news on Monday, I believe. So look at that sell overnight, or really in the morning and then into the afternoon here. So dollar index coming down pretty sharply. Anyway, all right, so let's skip over to XHB. Not much to talk about. It's still in no man's land between 111 and 120. VNQ still inside of this nice range here. I'm going to get rid of these fibs for now. And I can extend those lines out at some point. But yeah, it's still kind of flagging. So VNQ is still hanging in there. Some of the other sectors that got hit here are healthcare. And although, taking a look at XLV, by the way. Nice level with the 50% fib and the previous all-time highs right here. So this is kind of an RFK trade right now. But I do like this support level for a bounce. And obviously biotech taking a hit as well. So big outside move there. I think that gets supported at 92.50 for now. But anyway, XLF, I think this is going to roll over next week. It's very stretched, very tired up here at all-time highs, but financials really, really, really long in the tooth. You see KBE and KRE starting to roll over as well. JPM's still a powerhouse, though. Broker dealers backing off as well, so we'll see if that retraces. Again, still in a big uptrend. Absolutely monster move here. Oil continues to be soft. So again, we're at odds here. So the market is pricing in all this inflation in the short term, right? But oil is down. So there's definitely some things at odds here. And right now, oil needs to hold 67, or I think we could see 64. So that'll be interesting, and that'll be interesting to see what that does to yields too, if that does happen. XLE, on the other hand, is still very strong. So again, I've told you guys this before, don't just look at yields and say, oh, well, yields are up, so that means, don't just look at oil and say oil's up, and so XLE has to be up, and oil's down, so XLE has to be down. Again, regulations coming off is very big for these companies. So this is another Trump trade thing. I think energy does okay into the end of the year. I think really more towards Q1 next year is what we're looking for at this point, though. But again, XOP backing off the 200, OIH as well. A little bit of weakness there. Uranium came back in a big way today, although CCJ did come pretty sharply off the highs. There was some news out of Russia. But again, I think my guess right now is that a lot of retail piled in right here. That's just my guess here as to why it's not continuing to bounce back up. And I think this might need to come back down one more time here. Some of these uranium stocks. Still like them in the long term. Still think they're bullish, but I think a lot of people piled in here at the highs. That's just my guess right now. Nat gas testing 3, pulling back, trying for a higher low here. Bears are still in control until you break $3. Simple. Talked about the dollar, 107 resistance for now. I do very much like gold right here for a bounce, though, and I'll show you. So we talked about this. I do think there is an interim high, but in the near term, I think this gets a pretty good bounce here. So we just take the breakout pivot from June. You can see we just hit the 50% fib. Look at this area. I told you guys 25.50. Watch for that. It's right there. And just a really good level. Nice tail candle. There's a lot of negative gamma that rolls off after OPEX 2 on GLD. So I'm watching for a bounce here into, maybe I could see 26.50, maybe 26.75. Silver I like even better. Look at this trend line here, and you can see also from this pivot in August, we sliced the 618 and then pivoted off of that. So I like silver maybe up to 32 even. Maybe even a little higher. So I think metals here get a bounce, but we're still looking for tightening range consolidation, over the next couple of months. So they just need to cool off a bit. Platinum again backing off all the way down to 940. Don't really like that one yet. And then same thing with palladium. These could get a bounce here, but I'm not in love with them just yet. Copper got down to that 4 handle, bounce, and then right into that. I think this holds for now, but that's in danger too. And again, another thing that's at odds with yields. If copper is going down, where should yields be going? And vice versa. Bitcoin, obviously new highs. Got to my target of 93. I did take some profits up here. I still think this can make a run at 6 digits, though. It might need to do some consolidation, some backing and filling, but yeah, I don't really see a sell signal yet. But oof, what a beautiful pattern we talked about here, an amazing breakout there. A lot of meme coins running too, so that tells me that we still have some legs. Could that be a warning signal? Yes, but I still think there's a little bit of time personally. Anyway, again, so spiders here. Yeah, down today. Good retrace, needed it. Yeah, I think SPY 580 next week. Maybe that gets hit, but I think that's pretty good support here for the near term. We'll see how it reacts there. But again, bottom line, bears got to really damage this chart here in the next week or so. We're going to come into holiday period, and it's just going to be, to me, I think bodes well for neutral to upside. So that is the case here. But yeah, definitely a little bit of bull euphoria and a lot of forced buying that took place up at the highs there. So some bulls are trapped just like the bears were trapped down here 2 weeks ago. So anyways, guys, I'll wrap it up here. Again, you guys take care. Don't forget to come find Jason on Patreon. Come find me on CounterVarTrades.com. See you guys all next week.